Hey, what's up guys? Kevin Cage here with another crypto update. We have tons of news to go over today, so let's kick it off. First up, for some of the biggest news we've had this year is the SEC is officially suing Binance US, and their companies. The crypto assets traded on the Binance.com platform and Binance.us platform include assets that were offered and sold as securities. Remember that Gary Gensler, the SEC chair, has said before that he believes everything is a security in the crypto market besides Bitcoin. And just as John Deaton predicted last year that the SEC would be coming after other large exchanges, we know that they came after Coinbase recently in tandem with Binance today. Since the Binance platforms launched, defendants have made available for trading on them crypto assets that are offered and sold as investment contracts, and thus as securities. This includes, but is not limited to, BNB, BUSD the stablecoin, and the units of each of the crypto asset securities further described below, with trading symbols for Solana, ADA, Matic, Filecoin, Atom, Sand, Decentraland, Algorand, Axie Infinity, and Cody, collectively the crypto asset securities. And here's Binance's response on their blog just put out. I want to read this section right here. All user assets on Binance and Binance affiliate platforms, including Binance US, are safe and secure, and we will vigorously defend against any allegations to the contrary. Be very careful, guys. Not your keys, not your crypto. Cold storage is still the best option. Rather, the SEC's actions here appear to be in service of an effort to rush to claim jurisdictional ground from other regulators, and investors do not appear to be the SEC's priority. Because of our size and global name recognition, Binance is an easy target now caught in the middle of a US regulatory tug-of-war. It seems based on these developments that the SEC's goal here was never to protect investors. If that were truly the case, the staff would have thoughtfully engaged with us on the facts and in our efforts to demonstrate the safety and security of the Binance US platform. The SEC's real intent here instead appears to be making headlines. Now we have an amazing response from Charles Hoskinson. He was a co-founder of Ethereum and the founder of Cardano, with the native asset ADA, which is one of the assets on the list in the recent filings of the SEC. So here's his response. With respect to Binance, I'm reading through the SEC complaint. It's over 130 pages, but seems like the next in a series of steps to implement Choke Point 2.0 in the United States. The end goal is an agenda-based central bank digital currency partnered with a handful of massive banks and end-to-end control over every aspect of your financial life. Bingo. And as we know, instead of Gary Gensler, the SEC chair, actively working with regulators to build a framework for Web3, instead of leveraging the Howey test and different laws that were written in 1930 before the internet even existed, he was meeting, per the public calendar, with Vanguard to oversee his $100 million fortune. Doesn't make much sense to me. We have zero hedge right here. So JP Morgan, one of the biggest banks that we often discuss, has more than 13% of the nation's deposits and 21% of all credit card spending, a bigger share in each than any other bank. So JP Morgan, Citibank, and HSBC, some of the largest banks in the world, oversee 80% of all cross-border transactions. No wonder they don't like Ripple or what RippleNet can offer. And we already know that Gary Gensler has a background at a variety of firms such as Goldman Sachs. Now I thought that SEC officials were supposed to have sworn for protecting everyday people and protecting the retail investor. Whose interests are they really looking out for? Now check this out from Charles Hoskinson continuing. A regulatory event is where you have a debate about compliance with law or guidance. This event seems to be a political, philosophical disagreement with the very existence of cryptocurrencies and what they represent. An unelected group of people, let me repeat that, this group has been unelected by the way, and they're still running things, have decided that concepts like self-sovereign identity, owning your wallet, and the freedom to control your economic agency should be removed from the masses and given to the enlightened few. Honestly, what is happening isn't anything new. It's always the same fight between freedom and authoritarianism, just with different players, technology, and words. It does seem like this event is a perfect opportunity for the entire industry to set aside its fragmented nature and unite for a common sense set of rules and guidelines that can prevent the United States from slipping into a dystopia that would make 1984 look like a vacation. I'll have more to say later, but we'll close with "We are going to be fine. Everything's alright and the future is bright for the industry." Next up, so over the past week it has been absolutely nuts regarding different FUD campaigns, different exchange hacks, different hot wallets, etc. We also have right here, "Please be safe," shared by Crypto Law, referring to John E. Deaton's Twitter handle, John E. Deaton1. So his Twitter account has been compromised. Steer clear of this scam. John Deaton's phone has been hacked after a relentless cyber attack over several days. I repeat, this is a scam. This is not John Deaton. Do not visit this website. Do not click the link. Do not connect your wallet because you can lose all your funds. And I saw some commentary on Twitter that when John was talking to his phone provider, they said, "Did you piss off any tech-savvy people?" And I agree. Over the past couple years, John Deaton has helped immensely in terms of shedding light on government corruption. So yeah, there's a lot of people that he may have pissed off, some powerful organizations, not to name any, but I know you can think of a few. So is a powerful organization behind this? Is this just an individual or solo black hat hacker? What is the agenda and what is the purpose of attacking John Deaton? And just remember that all of these SEC lawsuits, all of these crazy hacks in a variety of ecosystems, bridges, DEXs, and exchanges is coming out at a very interesting point, as we coincidentally have NASDAQ set to launch their crypto trading desk. We also have Coinbase to launch institutional-sized Bitcoin and Ethereum future contracts next week. We have Tether announcing that they're investing 15% of their net profits back into Bitcoin, along with Hong Kong bringing back retail crypto trading. So Hong Kong reinstated retail crypto trading at select exchanges in what could serve as a test case for China reversing its 2021 ban on cryptocurrencies. And the Hong Kong Securities and Futures Commission announced it was going forward with a plan to allow individual investors to buy and sell cryptocurrencies with market caps like Bitcoin and Ether. So there's more listed, but they're typically high market cap crypto assets with plenty of liquidity. Now this is an interesting narrative because it doesn't have an immediate effect, but there are a variety of exchanges applying for a license in Hong Kong. So very interesting times in the cryptocurrency market. We have Nvidia creating a new all-time high price. We have Apple creating a new all-time high price. Well, Bitcoin is pulling back here. The question is, where are we going to find our level of support? Will it just be that 25K neckline? Will it be the weekly 50 MA? As you can see, it's acted as support previously here, then flipped into resistance. Here, a little bit of resistance, and then flipped. We have yet to backtest that level. And as we shared last month, we still have an open weekly gap on Bittrex with the Bitcoin Tether pair. So you can see no price action, no wicks, no candle bodies, right around 23,000. And for anybody new, we still have open CME gaps above and below. So the lowest open CME gap is at $9,800 and has been open for years. We have a CME gap below right around 20,700. However, we still have an open CME gap above near the 382 Fibonacci retracement in the 35K area. Now, if you're a fan of cyclical analysis, just remember the 3 Bitcoin cycles we've had over the past 10 years, each time has reached the 50% retracement or the weekly R1. So that would be taking us to 39 to 42K if we do follow the previous 3 cycles. And zooming out and looking at previous bear market bottoming structures, 2020, 2019, or all the way as far back as 2015. It's very likely Bitcoin still gets a decent retracement before the next halving set in April of 2024. You can see back in 2015 when Bitcoin challenged the weekly 50, rejected it, came back, and then broke right through, very similar to what we did recently, hitting, rejecting, and breaking through. So what I'd like to see most is Bitcoin to hold above this weekly 50 MA, which is right around 22.2. If we can maintain above the weekly 50, the trend is still bullish, very similar to different structures we've seen in the past. Only downside is that RSI is in free fall, and it could be passing through the 50 line. And I also know a lot of analysts are arguing that the new bull cycle has begun, and it is possible that our bottom was at 15.5 back in 2022. So some people are calling this to be a bull market because we do have higher highs and higher lows. I get that. And if I ever say I can't wait for this bear market to be over, I'm referring to different altcoins that are drawing like this, forming new lows for this year. So I know Bitcoin is going higher highs and higher lows, but when I'm looking at different altcoins and they're just in a free fall or a falling knife and forming new lows, I'm not calling it a bull market for those. Next up, after Charles Hoskinson talking about the central bank digital currency agenda we have shared by Ripple, Juniper Research estimates the global value of CBDCs will grow dramatically from 100 million today to 213 billion by 2030. That is insane growth. So James Wallace is the VP of Central Bank Engagements for Ripple. And just remember OMFIF, the official monetary and financial institutions forum, a $43 trillion think tank for central banking, sovereign funds, pension funds, regulators, and treasuries. This is an independent think tank for central banking, economic policy, public investment, providing a neutral platform for public and private sector engagement. And part of this think tank for central bank digital currencies includes symposium members with even the DMI symposium, including Algorand, Ripple, Accenture, Meta, AWS, Swift, Visa, etc. We can see James Wallace, the VP of Central Bank Engagement and CBDCs for Ripple in this list. And they also have Algorand, but they do need to update the CEO. But these are very large organizations. You have Meta, you have the DTCC, this is the Federal Reserve before the Fed existed. You have Visa, we have US Treasury, we have PwC Hong Kong, Amazon Web Services, Bank of Japan, Bank of Jamaica, HSBC, the Central Bank of Brazil, and then right here, Hong Kong Securities and Futures Commission. So a lot of big names in this list. We also have from Wojak right here an important announcement for the XRP ledger ecosystem. They will have a new separate ledger that will have XRP as its native asset. The Hooks sidechain is a separate ledger powered by the XRP ledger consensus protocol with the Hooks amendment enabled. It will introduce a unique line of features, applications, and opportunities to grow that are practically non-existent on the XRP ledger. With Hooks, developers are able to build and deploy a variety of products and features without needing to push changes directly on Rippled, which may take up months to even show up on the network for voting. This is amazing. The rate of research and development on the XRP ledger ecosystem will skyrocket. Developers, teams, and enterprises are able to jump into the Hooks sidechain and do research and development straight to it, as the underlying network is very similar to the main network. Teams are able to leverage Hooks and expand their line of products in a flexible manner, allowing them to introduce new income streams in ways never seen before on the main network. The more good hooks there are on the network, the better it is for everyone. We will grow. Users are able to leverage Hooks and expand their application of the XRP ledger, giving them the opportunity to extract more value from the network in a friendly way, and in turn making XRP more than just an overmarketed gas token. With Hooks, Evernode, and other solutions atop of the Hooks sidechain, the underlying network and its native asset XRP will have natural demand as the network develops in terms of its applications, user base, and liquidity. While Hook has its limited capabilities, Evernode will be launching right after the network. And Evernode is a layer 2 smart contract solution that is super flexible and powerful. Evernode dApps are able to interact with off-chain systems. It can compute, store, and provide anything. With Hooks, Evernode, and solutions atop of the Hook sidechain, each dev, team, and enterprise will be able to grow independently. So we have new apps, new income streams, new protocols, and new ways. So I'll try to cover this more in the future as I do some more research on it. I know there's going to be people that misconstrue this and misunderstand it. This overall is a good thing, and this is new demand that will have XRP as its native asset. So this is more demand for XRP. But alright guys, that's enough out of me. I'm losing my voice a little bit. I hope you enjoyed this video. Huge thank you to all that hit the like button, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.